Hi guys. Today we will analyze Nucor stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been a medium performer in the overall market. The long and short-term trends are both positive. Strong support levels are around $135 and $125. Next strong support levels are around $112, $102 and $92. Strong resistance level is around $143. Next strong resistance level is around $170. In the last month the stock has been trading between $120 and $145 range, which is wide. It is currently trading near the high of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 1.9 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth. Even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 22% per year, for last 5 years. We see that the average profit margin of the stock has been around 9% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 88% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Nucor Company: bad, average, and good. First scenario. Nucor will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be a low, -6%. Future profit margin would be a low, 8%. Future free cash flow to net income rate would be a low, 60%. In this case, the fair value of the stock today would be $53. Second scenario. Nucor will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, -4%. Future profit margin would be average, 9%. Future free cash flow to net income rate would be average, 70%. In this case, the fair value of the stock today would be $69. Third scenario. Nucor will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, -2%. Future profit margin would be high, 10%. Future free cash flow to net income rate would be high, 80%. In this case, the fair value of the stock today would be $89. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 32.72. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Nucor, analysts forecast growth rate around -6% per year in next 5 years, and future P/E around 4. Again, I will use 3 different scenarios for Nucor Company: bad, average, and good. First scenario. Nucor will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be a low, -6%. Future P/E would be a low, 4. In this case, the fair value of the stock today would be $32. Second scenario. Nucor will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, -4%. Future PE would be average, 5. In this case, the fair value of the stock today would be $48. Third scenario. Nucor will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, -2%. Future PE would be high, 6. In this case, the fair value of the stock today would be $69. As you can see, today the stock is overvalued, $138, even if we expect the company's high performance in future. While the company has a great profitability rating, there are some minor concerns on its financial health. Also, the stock is expected to show a decrease in revenue in the next 5 years, -6% yearly. Based on that, the stock looks overpriced at the moment. The stock is a dividend aristocrat. I may consider buying the stock for the dividend, when the stock drops to $75. Company strengths. Nucor Corporation is an American producer of steel and related products. It's the largest steel producer in the U.S., the largest mini-mile steelmaker, and the biggest recycler of scrap in North America. The company has a sector-leading strong balance sheet. It has bought a lot of shares and reduced debt. So, Nucor is well positioned to withstand the prolonged downturn. Nucor's green business model is a leader in North America, and should be appealing to environmental, social and governance investors. Commodities tend to be defensive investments during periods of inflation. Nucor and other domestic steel producers will benefit from improving industry fundamentals and tariffs on imported steel. Nucor has announced several growth projects, including a new plate mill in Brandenburg, Kentucky, and a new mill in West Virginia. The company is a dividend aristocrat. It has built a highly profitable business that has allowed it to support 49 straight years of dividend increases. The stock currently has 1.45% dividend yield. The company also has a share repurchase plan. The company's return on equity of 54%, return on assets of 29% and profit margin of 21% are amongst the best returns of the industry. Risks. Steel demand and price are in a broad decline. Concerns about a global recession limit the stock's potential. The Wall Street consensus outlook is neutral, with no expected price appreciation over the next year. The steel industry is extremely cyclical and highly competitive. It may also be affected by excess global capacity, which has limited price increases during periods of economic growth, and led to price decreases during periods of contraction. In addition, the industry faces competition in many markets from producers of aluminum, cement, composites, glass, plastics and wood. Steel producers also face risks associated with commodity prices, interest and exchange rates, asbestos liability, and environmental issues. Nucor will struggle to drive margin expansion, due to the continued impact of global overcapacity on pricing. Nucor's operations are exclusively concentrated in the U.S., which limits the company's ability to supply higher growth markets. The company is expected to show a decrease in revenue. In the coming 5 years, the revenue will decrease by -6% yearly. The earnings per share is expected to decrease by -15% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.